Good evening. I'm Chart Gal Lori, and I'm covering for Charting Man Dan tonight. This is who I am. If you want to give me a follow on Twitter at Chart Gal Lori, and I'm doing the market recap video for Thursday, December 8th. So, as always, we're going to get started with SPY or ES. I trade ES futures, and I like to look at the futures chart. It gives me more data because it trades 23 hours a day, 5 days a week. And we have two patterns that are battling right here. We have a broadening formation where we got higher high without follow through, lower low without follow through, representing bull and bear exhaustion to the upside and to the downside. We found a little bit temporary support here in this area, and we also have a potential bear flag forming on ES and on NASDAQ. If we can't get over 398875 tomorrow, that could be a bearish signal that this could be a developing bear flag. So 3988 is that key resistance for a potential bear flag on ES, and for NASDAQ, it's at 1169850, and that's from the high of Thursday, December 1st to the low of yesterday. And today we hit 11685. We came within $13 of that 0.382 resistance that keeps the bear flag alive for SPY and NASDAQ. Despite this bear flag potential, we did have a green day. Bulls did play defense. We have a big event tomorrow. We have PPI. So we have PPI tomorrow at 8:30 Eastern, and we're expecting 0.2%. Now, historically, PPI is not a huge number that Powell and the FOMC considers. It's not one of the bigger numbers. However, with the liquidity issues and the volatility that we have in the current market, where algos are really going crazy on any type of data, whether it's super important or not, I wouldn't discount PPI tomorrow based on historical reactions, because we're just in a very temperamental state with the economics, the economy, and some uncertainty. So definitely something to put in your calendar. And also we should look at next week. So PPI tomorrow, then it grows to more important. Tuesday, CPI, super important. And then the most important is the FOMC announcement of the interest rate decision, and then the Fed conference next Wednesday. So I said in the pregame, we're like building up this crescendo from PPI, kind of important, to CPI, very important, to FOMC, the most important. So we have an important 4 days of trading ahead of us. So let's go back to the charts. So we look at ES and location. If I take the fibs levels off, so 398875 is that key level. So if we take that off, we can see this broadening formation. We're down here at support. Now let's look at the inverse chart. Now VIX isn't always inverse 1-to-1 with ES. When it is, it can provide some helpful clues. So we're up at the resistance trend line up at the top for the VIX. We made a higher high without follow through, a lower low without follow through. We're really struggling up here. And I believe that location of where VIX upper resistance was help the bulls bounce today. So we have a few conflicting signals, so let's just kind of go through the charts. Let's start up here at the dollar. The dollar is trapped under the daily 200 MA, and we're expecting a daily lower high, and that's most likely set. Yes, we got the hourly lower low, and this could be an hourly bear flag on the dollar. That behooves the market bulls. That is a tailwind for market bulls for this dollar weakness. Okay, bonds look great. We have a problem though. Houston, we have a problem. We're looking for a monthly lower high and a weekly lower high. It doesn't mean it has to happen, but odds favor with this size move to the downside. We are looking for that weekly lower high. We've made enough room for a weekly higher low, but if bonds were to start pulling back, that could put some pressure on the markets. So the dollar and bonds are conflicting signals. With this dollar weakness, that is good for market bulls. And bonds have been super strong, but they're daily overbought now. Daily overbought in a monthly downtrend is typically an area where we start scouting that monthly and weekly lower high. So just something to be aware of. I'm not saying bonds are going to stop their charge up, but it's something concerning for equities. US 10-year. US 10-year has been strong, and we're looking for the monthly higher low, and we're looking for the weekly higher low on US 10-year. Now, bears have played great defense up here. Now on the next bounce, we're looking for a weekly lower high on US 10-year, and that also behooves the market bulls. So US 10-year and dollar, the way their charts are set up, it's good for market bulls if we can continue this weakness. But I still have to just scroll out and look at those higher time frames and say, okay, we're looking for that weekly higher low. We got 4-hour oversold. Let's see if that did it. So if the US 10-year continues bouncing, that wouldn't be good for equities tomorrow. We went over the ES key levels. I told you that 3988 keeps the bear flag alive on the weekly, and your new hourly resistance, the high of today, 397725, and you have a support here of 394850. All right, next let's look at SPY. So again, SPY has that potential weekly bear flag. Let me clear all this off and draw it anew for you. 39865 keeps the bear flag alive on the weekly. Same thing as futures. We're looking at this broadening formation here. Excuse my quick drawing. But we're down here at the bottom end of this broadening formation. So we're in a pivotal area to see where we go from here tomorrow. Do we break down and confirm that daily bear flag, or do we break up and confirm this megaphone that is more of a legitimate pattern that we've been speculating on? NASDAQ, if it stays below 11,700, just to round off, that keeps a potential daily or 12-hour bear flag alive. And I want to show you what happened today. I get messages, a lot of messages on Twitter. If the market pulls back suddenly, everyone starts looking for news. You have to remember, we can have technical breaks. When the market is trying to do something, in this case, the market was trying to break bull. We could see it on the QQQ chart. We got a higher high here on the 15-minute, right here at 11:30 Mountain Time, so that would be 1:30 Eastern. We broke to a higher high. Semiconductors, higher high. Okay, perfect. So the market is trying to pull ahead and make that new high of the day and put an exclamation point on their move for the day. But guess who couldn't do it? SPY and Apple. They got lower highs at that same exact time. They got lower highs. So because SPY and Apple couldn't follow QQQ and SMH, the market pulled back precipitously. Does that mean that we had news that Powell sneezed or something? No, we just had when the market is trying to do something, and what it's obviously trying to do, it can't make it work. The computers step in, they could see, oh, we've got bearish divergence. This is bearish divergence. Lower high, higher high, higher high, and they pounce. That's where bears pounce. When the market, I guess I'm not saying this correctly, when the market is clearly trying to achieve a goal and then it can't, the market bears are like, ha, they don't have the juice. I'm stepping in. We had semiconductors working in our favor today, and that was something we looked at in pre-market. It was a beautiful setup. It worked well, but we did have some weak areas. XOP was red. We had we had Tesla red, Walmart, and we had XLC that was super weak. I know I'm kind of all over the place. Bear with me here. So this is a 2-minute chart, but you can see that communications was weak, healthcare was strong, technology strong, industrials were weak, consumer discretionary was strong, Apple was strong, financials were pretty weak for the day, and semiconductors were strong. So we had a mixed bag, and you can just clearly see it with the colors of this heat map that we have a mixed bag. So that's why SPY was unable to break to those higher highs, and it was timing of those 15-minute EQ bull breaks and failure to achieve higher highs on the day. So let's go look at Bitcoin. So Bitcoin, I've been preaching about this for a few days now, if not a week. This is a potential bear flag. As long as Bitcoin bulls stay below 17759.18, a weekly bear flag is possible. Now, we have a nice bull push up right now. Nice. Great job. We're still going sideways on the daily. They haven't proven anything till they get through 17,424, and they really haven't proven a lot until they get through 17,800. But at least the bulls are playing defense here, or excuse me, more so offense. This was some nice volume. So let's see how it shakes out on the day. Is this a canary in the coal mine when Bitcoin pulling ahead? Is it telling us that indices could pull ahead? We'll see. Gold is trapped below the weekly 50 MA. I don't like it here. I'm looking for a potential daily lower high against 1822. That could be a top fish area. And I'm looking at that with that weekly 50 MA, tattooed on my brain because it's overhead. Oil is super weak. We're approaching daily oversold. We just keep losing supports. We're in a monthly downtrend. The one little glimmer of hope for bulls is this monthly 200 MA at 72.54. As long as we close above that before the end of the month, we have a little hope, but we did have a monthly bear flag break bear. There's just not a lot of hope out there for oil bulls. Nat gas. Nat gas odds favor a daily lower high. We had inventory today. We didn't fill that gap here at 6.221. This is when the contracts rolled over. We were unable to fill that gap, and we're looking for that daily lower high. I shorted oil today on the inventory, and I got one contract out for green and one contract out for red. Pretty much a push. I definitely don't like this formation up here. If we could push up a little bit closer to 6.164, I think it could be a good top fish area, looking for that daily lower high. Again, Apple, we covered in pre-market. We needed 140 to hold. Apple is infamous for that look below and fell. It hit 140, and it was unable to break down yesterday, and that was a great sign for market bulls that Apple held that 140 today. We hit 141.10. What was the next name I wanted to look at? NVIDIA. NVIDIA had a strong move up. Hourly RSI is 85. So 172.65 is your last daily higher high. Aggressive bears could look to top fish that tomorrow, but just know that you're picking on the biggest bully in the playground. Neo was a pregame queen of the mountain trade, and my setup was looking for a bottom fish of the high of yesterday, playing off Hang Seng's 3.38%, I believe. They were up overnight, so I was looking for a pullback buy on Neo using 1272 as a support. Former resistance could potentially act as support. That was a queen of the mountain trade this morning. It worked. I did not take it. I was busy with other things this morning. Our other queen of the mountain trade was the semiconductor chart setup. We had this major compression where, and this is what I actually drew this morning in pregame, just showing that compression, and I was looking for a break up on SOXL. So if you took SOXL, you were up about 7.5% on the day. So semis really carried us today. XLF has a potential daily bear flag. It does not look healthy at this point on a bounce. Bears are looking for a daily lower high. XLV is up here near resistance 140.16. We hit 139.93 today. So that's something to watch tomorrow. If XLV is going to pull back, then we need XLC to step up, XLI to step up, and XLF to step up. XLV has just been our muscle train for a while. And then finally, MSOS, gap down could be for buying for aggressive bulls only. If we flush through $10 tomorrow morning, 940 is your next support. And the logic is we're looking for bears to potentially cover before they go into the weekend. There's definitely more headline risk for bears than there are bulls. So our chat room will be all over this one in the morning and hoping for a gap down. Not for those of you who already have positions, sorry about that, but for those of you who don't have positions and looking for a day trade. So don't forget, give me a follow on Twitter at ChartGuys, and I tweet out my pregame show, and we have tools like this table. This is my table from early this morning. We fill out and go over together. So why don't you join us? Thank you for being here, and Dan will be back next Monday.